Good morning everyone. Welcome to the official YouTube channel of Officers Adda 24/7. मेरा नाम है. My name is Amanjot and today we are going to discuss the MCQs which is related to multiple topics. We are going to do the miscellaneous topics MCQs today. So before starting the session, let me know, am I audible to all of you, and the screen is also visible? Are we good to go? So everything is okay. Let's start today's session where we are going to discuss the MCQs related to principles and practices of banking. So before starting the session, there is one news for all of you, that is there will be flat 80% off on all JAIIB, CAIIB and bank promotion exams product if you use a code that is Y496, where you can avail this particular offer. You have to go to the Adda 24/7 application or you have to go to the Adda 24/7 website to avail this particular offer for your all products which are related to JAIIB and CAIIB. Okay, so let's start from the first question that is related to our RBI's monetary policy. So it is asking that to make the cost of credit costlier, which of the following is done by Reserve Bank of India? If RBI want to make the credit availability in the market costlier, then which of the following steps will be taken by Reserve Bank of India? The first option is saying that RBI has to decrease the bank rate. Second is saying RBI has to increase the repo rate. Third is saying RBI has to increase the SLR, and fourth is saying all of the above. So which of the following steps will be taken by Reserve Bank of India whenever Reserve Bank of India wants to increase the cost of the credit available in the market? Now let me know what will be the right answer for the question number 1. It will be all of the above. Write the question carefully, focus on the key points of the questions. The question is asking that RBI want to make the cost of credit costlier. RBI wants that the credit which is RBI providing in the market will be available at the higher rate of interest for the customers, for the public, for the banks. See, the right answer will be here. RBI want to increase the repo rate. Whenever RBI will increase the repo rate, the loan RBI is providing to banks will become costlier, and when banks are getting loan on costlier rate by Reserve Bank of India, then banks also increase their lending rates for the public. So the rate of interest will increase for the public also because RBI has increased the repo rate. If we decrease the bank rate, if we talk about the option number first, if we decrease the bank rate, it means banks will get the loan at low rate of interest. When banks will get the loan at low rate of interest, banks will also decrease their lending rates. Now if we are decreasing our lending rates, the cost of credit will not become high. Now if we talk about SLR, if RBI increases SLR, now increment in SLR will make sure that the reserves of the banks will be higher. Reserves of the bank will be in comparison to earlier, it will be higher. So it will not increase the lending rates drastically, but when RBI is providing loan to the repo rate to commercial banks at higher rate of interest, it will increase the lending rates of the commercial banks. So it will increase the cost of credit in the market. The right answer will be option number B. Second question is asking, under section 22 of RBI Act 1934, which of the following statement is not correct? So we know that RBI was introduced with the help of RBI Act 1934. RBI was established on 1st April 1935. Now which of the following statement has been defined under the section 22 of RBI Act 1934? The first statement is saying has authority to issue and manage the currency of India. It means RBI has the whole power to manage and control the currency system in the India. Second is saying can issue banknotes having denomination from 2 to 10,000 rupees. It means RBI can issue the currency notes, each and every currency notes of any denomination, doesn't matter is it of 5 rupee note, is it of 10,000 rupee note, is it of 2,000 rupees note, but above 2 rupees. 2 and above currencies will be printed by Reserve Bank of India, or RBI can issue these denominations currencies. Next, third option is saying the bank notes having legal tender at any place in India. Whichever banknote we are using, whatever currency we are using, we are able to use that currency, we are able to make exchange of goods and services on behalf of that currency because that currency has a legal tender in the India. Now fourth option is saying issue all banknotes and currency notes. So which of the following statement is not correct under the section 22 of RBI Act 1934? Option number D. Okay, very good. The right answer is option number D, because under section 22 of RBI Act 1934, RBI has the sole right to print all the denominations of currency notes, but except rupee 1. 1 rupee note will not be printed by Reserve Bank of India. 1 rupee note will be printed by Ministry of Finance, Government of India. That's why the fourth option will be incorrect. So in RBI section 22 RBI Act 1934, RBI has sole right to print all denomination but from 2 and above currencies. Okay. Now RBI can issue the maximum denomination of currency note, that is 10,000 rupee. RBI can issue the maximum note denomination of note is 10,000, and RBI has issued 10,000 rupee note 3 times in the country, but in all the 3 times it was demonetized by the Government of India because of the money laundering or because of the illegal transactions in the economy related to currency, or we can say people were storing their black money in form of 10,000 rupees. That's why government has not given the legal tender for the currency 10,000 rupee. Okay, and it was demonetized by the Government of India. 3 times 10,000 rupee was demonetized. Now when it comes to 1 rupee note, 1 rupee note is printed by Ministry of Finance, Government of India, and it contains the signature of Finance Secretary. All the currencies which are from 2 rupees to 10,000 rupee note, the signature will be present of the Governor of RBI, but on 1 rupee note the signature will be done by the Finance Secretary, because it is printed by the Finance Ministry, not by the Reserve Bank of India. Now RBI print currency notes in 4 places, that is Devas, Nasik, Mysore and Salboni. These places are known as printing press. Now from these 4 presses, RBI has 2 press, that is your Devas and Nasik. Last 2 places, that is Mysore and Salboni, will be regulated by, or in that presses BRB NMPL, Bharati Reserve Bank Note Mundran Private Limited, which is a subsidiary, which is a wholly owned subsidiary of Reserve Bank of India, will print the currency notes. Okay. Now next is third question. Third question is asking about a dash is a type of transferable financial instrument traded on a local stock exchange of a country but represents a security issue by a foreign publicly listed company. Which of the following will be right option? Is it depository receipt? Is it options? Is it derivatives? Or is it P notes? P notes are the participatory notes. P notes are the participatory notes. Now, which of the following will be the right answer? A, B, C or D? Focus on the key points of the question. Question is asking that dash is a transferable financial instrument traded on local stock exchange of a country but represents a security issue by a foreign publicly listed company. It means we are selling financial security, financial instrument in the local country. It means in the domestic country, but the shares which are listed on this local stock exchange are from the foreign company. So what will be the right answer? A, B, C or D? Very good. The right answer will be your depository receipts, because depository receipts are the financial instrument which represents the shares of a local company in the foreign stock exchange. So whenever we are talking about if a company is issuing its shares in other country in comparison to its domestic country, then it will be known as depository receipts. There are 3 types of depository receipt. One is American depository receipt, second is global depository receipts, third is your Indian depository receipts. So all these depository receipts represents the shares of a local company in foreign stock exchange. The right answer will be your depository. It will not be derivatives. What is derivatives? Derivatives simply are a product which derives its value from 2 or more basic products. Okay, and those 2 or more basic variables are known as underlying assets. So derivative will not be the right answer, because derivative is a product which derives its value, which creates its value on the basis of 2 or more basic variables which are known as underlying assets. The example of underlying assets can be your exchange rate, your index, your bonds. It can be the example of your underlying assets. So the answer right for the third question is A option, that is depository receipts. Next, a central bank differs from a commercial bank in that it is a bank of the state, it has largest reserves, it oversees commercial banking system. So what will be the right answer about the central bank, that why the central bank, the reserve bank of our country, the apex bank of our country differs from the commercial bank? What is the difference between the functions of a central bank and the commercial bank? Is it 1 only, 1 and 2 only, 1 and 3 only, 1, 2 and 3 all? What will be the right answer? See, if we are talking about central bank is the Reserve Bank of India and it differs its functions from the commercial bank of our country. Now, what are commercial bank? Commercial banks simply are the banks which works for the profit. The main motive of commercial banks are to earn profit, and they provide all kind of commercial investment services. It means in a commercial bank you will deposit your money, you can withdraw your money, you can take a loan, you can clear your check, you can issue demand draft, you can perform the payment system from the certain commercial bank, you can have the locker facility from the commercial bank. It means commercial banks are providing all kind of services, primary, secondary, investment, commercial services, all kinds of services. But Reserve Bank of India do not provide all kinds of services. RBI is the central bank which regulates the currency system, the banking system of the country. So what is the difference between RBI and commercial bank's function? It is true that it has the largest reserves. Central bank has the largest reserve. It oversees the commercial banking system. It is also true, but it is the bank of the state? No, it is the bank of the country. So right option will be your A option, that is first only. Okay, commercial bank oversees the commercial banking system now. Next, which of the following statement is correct? First statement is saying that RBI is the regulatory body of banks and security market, that RBI regulates the banking system and the security market system. Second is saying RBI started functioning as a central bank from 1934 onwards. Third is saying RBI's one of the function includes maintaining the financial stability of financial institution in India. Now, next fourth option is saying notes in certain denomination from rupee 1 to rupee 10,000 are issued by Reserve Bank of India. Which of the following statement is correct about RBI's function? First, second, third or fourth? First is saying that RBI is the regulatory body of banks and as well as of security market. Second, RBI started working from 1934 onwards. Third is saying RBI, one of the function is to maintain the financial stability of financial institution in India. And the last is saying all the notes will be printed by Reserve Bank of India. Fifth is C. Very good. Fifth is C option, because security markets are regulated by SEBI. It is not regulated by Reserve Bank of India. So first option will be wrong. And if we are talking about when RBI started its functioning, RBI started its functioning from 1st of April 1935. Because on 1st April 1935, RBI was established, right? So the right answer will not be B. If we are talking about D option, we have already discussed in the earlier questions that RBI prints all the denomination except rupee 1. RBI cannot print the rupee 1 denomination of currency note. So it cannot be the right answer. The right answer will be your C option, in which RBI, one of the function is to maintain the stability, to maintain the financial stability of all the financial institutions in our country. Okay, that's why RBI is providing certain reserve ratios to the banks. Next, which of the following option is correct? So the first statement is saying all scheduled bank branches can handle foreign exchange transaction. Second is saying repo rate is lower than the reverse repo rate. Third is saying payment banks cannot provide loan to public. And fourth option is saying the target for PSL for RRBs is 75% of ANBC or CEOBE. Now, which of the following will be the right statement about this in this particular question? What does PSL stands for? PSL is priority sector lending. Now, whenever we are talking about priority sector lending, so what is these priority sector lendings are? According to Reserve Bank of India and Government of India, there are certain sectors in our economy which needs improvement, which needs development, and the commercial banks were not lending to that particular sectors because those sectors were not so developed at that time. So RBI and Government of India said that there are certain sectors in our economy that really needs the improvement and development, and these sectors were decided by RBI, and RBI has launched a certain scheme, that is priority sector lending, in which we have given 8 sectors the priority for the lending purpose. It means whenever the banks are providing loan to the public, they have to make sure that their first priority to provide loan to the public will be these 8 sectors of PSL, right? So PLSL stands for your priority sector lending. So everyone is saying the C option is true. Okay. The correct option is C. Everyone is saying that. So first of all, if we talk about scheduled bank, what are the scheduled banks? Scheduled banks are those banks which are listed under the second schedule of RBI Act 1934. So those banks who are listed under the second schedule of RBI Act 1934 are the scheduled banks, and those banks who are not listed in the second schedule, those banks are non-scheduled banks. But when we are talking about scheduled banks, it covers all the banks. It covers the commercial bank, it covers the non-commercial bank, it covers the cooperative banks also. It covers public sector, private sector, foreign bank, small finance bank, RRB. It covers every bank except local area bank of our country, because only the local area banks are the type of non-scheduled banks, okay? And there are only 3 local area banks in India. So the first statement will not be right, because non-commercial bank do not have to maintain or the non-commercial bank do not perform the foreign exchange transactions. So A will not be correct, because RRBs can also not provide these kind of services. So A is not the correct statement. If we are talking about repo rate and reverse repo rate is not lower, repo rate is higher than the reverse repo rate. It will not be also right. C option is saying payment banks cannot provide to loan to the public. It is very true, because payment banks cannot provide to loan to the public because they have a certain limited deposit. They can accept a limited deposit from the public. What is the limit of the payment bank? What amount of deposits can be? Maximum amount of deposit can be accepted by payment bank. Is it 1 lakh, 2 lakh, 3 lakh, 4 lakh, 5 lakh? What is it? So payment banks cannot provide loan to public. They can only invest in the risk-free assets, which are government securities. They can't provide loan to the public. Okay, very good. It is now up to 2 lakh. Earlier it was 1 lakh, but now RBI has increased the limit from April 2020, in which RBI has said that the payment bank can accept deposit from the public up to 2 lakh. Okay. Now, so payment bank only accepting up to the 2 lakh rupee of deposit, so they cannot provide loan to public, but they can invest in the risk-free assets. So this statement is true. If we are talking about D option, the target for PSL for RRBs is 75% of ANBC or CEOBE, whichever is higher. Whichever is higher is very important. How the bank will decide that what percentage we have to provide to the PSL sector, the percentage of ANBC or the percentage of CEOBE. So it depends that whichever will be higher, the bank will provide the percentage of their ANBC or CEBU to the PSL sector. There are 8 sectors in the PSL. So the right option will be your C option, because it is true the payment banks cannot lend to the public. In certain situations, if we have talked about payment banks, we have seen that the Paytm payment bank is providing credit card to the public. Paytm payment bank is also providing a certain kind of advances to the public. Now, why Paytm payment bank is providing these advances or credit card to the public, while RBI has said that the payment bank cannot provide loan to the public? Why Paytm payment bank is providing these kind of services? What was the reason? Yes, ANBC stands for adjusted net bank credit. That's true. Yes, it is a. The fourth option is incomplete. That's why it will not be the correct statement. Satyendra, the 40% target of PSL is for the commercial banks, domestic commercial banks. Okay. Now let me know why payment banks are capable, why Paytm Payment Bank is capable of providing the credit card and providing certain advances to the public. If you do not know the answer, then let me know. Now let's move forward. The next question, that is A and BC. What does A and BC stand for? There are certain abbreviations which is related to your banking awareness, financial awareness, which are important for your exam, which you have to learn. Like for example, A and BC. What is what NEFT stands for, what MCLR stands for, what RLLR stands for, what LEI stands for. These are the certain important abbreviations which can be asked for your 1 marks question. Okay. So what will be the right answer here? What does A and BC stands for? It stands for adjusted net bank credit. This is the value of the amount which the banks has adjusted after maintaining all kinds of reserves with themselves and providing the loan to the public. The right answer will be A option. Now, next question is full form of BCBS. What does BCBS stands for? What does BCBS stands for? Is it Banking Committee on Bank Supervision? Is it Basel Committee on Bank Supervision? Is it Basel Committee on Banking Supervision? Or is it Banking Committee on Basel Supervision? What is the right option related to BCBS full form? 8th is C. Okay. Right. So the true full form is Basel Committee on Banking Supervision. Now Basel Committee is a certain committee which provides the international banking regulations norm. It provides the certain regulations to the international banking system so that they will not face a certain kinds of risk in the banking system at the global level. Okay. Basel Committee is not only for India, it is a global committee which gives you the international banking regulations. Next, which type of account is used to make FDs in foreign currency? Is it a FCNR account? Is it a NRE account? Is it a FD account? Is it a Nostro account? So which of the following account, in which of the following account we can maintain our FD in foreign currency? Yes, that's true. The headquarter of Bank for International Settlement is in Basel. Okay. Now BIS, Bank for International Settlement, acts as a bank for all the central bank of the different countries. What will be the right answer of the 9th question? A, B, C or D? 9th is A, that is FCNR. Okay, everyone is going with FCNR. FCNR stands for foreign currency non-resident accounts, in which all the NRIs, all the PIOs, all the OCBs can open their account in form of FD in any foreign currency. Okay, so the limit of FCNR account, you can maintain your FDs in particular foreign currency in which you want, for the minimum period of 1 year and maximum period of 5 years. Earlier it was 3 years, but RBI has extended 3 years to the 5 years. So right answer will be your FCNR. Now NRE account is your non-resident external account in which a foreign an NRI, non-resident Indian, can maintain CASA RAFA accounts in Indian currency. Okay, NRE account will be in the Indian currency. FD account is simple, the fixed deposit we are maintaining, okay, in which we can maintain our funds for a certain period of time from 7 days to 10 years. Now Nostro account is a foreign currency account in which the Indian banks maintain a certain current account in the foreign bank, in the branch of foreign bank, in foreign country, in foreign currency. That account is known as Nostro account. Okay, so the right answer will be FCNR account, that is foreign currency non-resident account. Next, if an Indian person wants to maintain an account in foreign currency, is it possible? If an Indian citizen wants to maintain an account in India in foreign currency, is there any kind of account which we can open? Like for example, if we are talking about FCNR account, this FCNR account will be maintained by NRIs. They can maintain their FD in India in form of foreign currency. Will Is it possible that I can open a foreign currency account in India, in Indian bank? Let me know. Vostro account. Vostro account is not for the public. Nostro, Vostro and Loro, these accounts are the accounts which maintained by banks to banks. Okay, when a domestic bank is having account in foreign bank, it is known as your Nostro account. When foreign bank have an account in domestic bank, it is known as Vostro account. Thank you so much, Satyendra. Now let me know if we are capable of opening a foreign currency account or not in India. If you do not know the answer of the question, just say we don't know. So that we will discuss and we will move forward. See, you have heard about the account EEFC. EEFC accounts. Have you heard about this account, EEFC account? EEFC stands for Exchange Earners Foreign Currency Account. These are the accounts which can be maintained by an Indian citizen in India in form of currency. It is not a FD, it is a current account which we can maintain in any bank, in any scheduled commercial bank in India. In EEFC account, only Indian citizen can maintain the account or Indian company can maintain account who are resident of India. Okay, and one important thing is you only maintain the foreign currency which you have earned. Okay, you can't exchange the Indian rupee to the foreign currency and maintain in this account. No, any individual person, any company who are earning the foreign currency in India, let's say they are exporters, they are importers, they are dealing with the foreign trade, then they can maintain a foreign currency account in India. That is a current account, no interest will be paid to you. And in EEFC account, only the persons, only the companies who are resident in India and earning foreign currency can maintain the account. Okay, remember this account also, it is a very important account. Now next is balance of payment refers to. What does balance of payment refers to? It is also known as BOP. First statement is saying the balance of receipts and payments of all the banks is known as balance of payment. Second is saying the balance of receipts and payments of a state bank is known as balance of payment. Third is saying the balance of receipts and payments of foreign exchange by a country is balance of payment. And the fourth option is saying the balance of government receipts and payments. Now what will be the right answer? EEFC stands for Exchange Earners Foreign Currency Account. EEFC stands for Exchange Earners Foreign Currency Account. Now before moving forward, those people who are live to the session, do like the session and share with your friends and colleagues also. Now what will be the right answer? Devashish is saying C, that is balance of receipts and payments of foreign exchange by a country. Okay. Satyendra is also saying C. What about rest? Rama is saying D. Okay. See, the right answer will be your C option. D is not the right answer. D is talking about the budget. The D option is known as budget. The balance of government's income and expenditures is known as annual financial statement, which is defined under the article 112 of our Indian constitution, which is known as budget. Okay. When we are talking about balance of payment, let's understand what does balance of payment means. Let's say this is our country. This is the country India. This is the geographical boundary of our country. Let's assume that. Okay. Now in India, we are having a certain economic transaction. India is having a certain economic transactions with rest of the world. Okay, whenever we are talking about economic transaction, it means we are talking about the transactions which are related to money, right? And India is having economic transactions with other countries, with the rest of the world. Now outside this boundary, we have the rest of the world. Rest of the world. So India is having in a financial year the economic transactions, the transactions which are related to money with rest of the world. Okay, where we are earning certain money, that is the inflow in our country, and we are paying certain money, that is the outflow from our country. Inflow means, it means simply means that India is earning This is the income of our country while we are having the economic transactions with other countries, and outflow is the payments of our country which we are having while we are having the economic transaction with the rest of the world. Now, what are the different sources of earning from rest of the world? Let me know. What are the sources from which we can earn, India can earn money while we are having economic transactions, while we are having trade with the rest of the world? What are the different sources from where we can earn our certain money? Let me know. We can say exports. Exports is one of the example from where we can earn money from other countries. If we are exporting our goods to the foreign countries, to the abroad, then we will get the certain income. So first option is export. With the help of exports, we are earning certain money in the country. Apart from this, we have investments. The foreign companies invest in India, and those investments are our inflows. Okay. Apart from investment, the tourism. Tourist comes to India and it gives income to our country. Tourism is also one kind of example where we are earning money from rest of the world. Next is remittance. Remittance means simple transfer of funds from one country to another. So those Indian citizens who are working abroad, they are transferring money to their parents for the family maintenance. This is also known as the income for the India. Then apart from this, the grants. Grants are the simple, the financial help any person is doing by their will. Okay. Whenever we are talking about inflow, whenever we are talking about income we are having from the trade of the rest of the world, these are the examples from where we are earning money. And when we are talking about outflows, first is imports. Whenever we are importing goods and services from foreign country, we have to pay back them. Next, others will be same, that we are investing in the foreign country, we are going as a tourist in the foreign country, we are the person who are remitting money from India to abroad, we are the person, we are giving grants to the other countries, we are helping financially to the other country. Now these are the transactions which happens between India and rest of the world in a financial year. And all these transactions are known as economic transaction because all the transactions are related to money. Now, whenever we are maintaining the record of all these transactions, the systematic record of all economic transactions, between India and rest of the world in a financial year is known as balance of payment. So what is the definition of balance of payment? Balance of payment is a systematic record of all the economic transactions which is happening in a financial year between India and the rest of the world. Okay, so the right answer of the 10th question will be C option, because we are talking about the foreign exchange by a country in which there are certain inflow is included and there are certain outflow are also included. Okay. So now I hope balance of payment is clear to all of you. So this is the balance of payment, whatever economic transactions, whatever monetary transactions happening from India to abroad. Okay. Now the next thing which is important for all of you, that we have launched an English medium batch for your JAIIB June 2022 target exam. So this batch is starting from 16th of April 2022. You can use a code that is Y496. You can use this particular code to avail the 80% discount. As I have told you earlier that right now till the 10th of April we are having a certain offer in which you will get 80% off in all your JAIIB, CAIIB preparation batches, your books and your recorded sessions, or we can say the mock test also. So you can attain 80% discount on this particular product or by using a certain code that is Y496. Okay, so thank you all for joining the session, and if you are new to the session, new to the channel, do subscribe the channel and press the bell icon so that you will have the recent updates which are the related to our upcoming sessions, and you will not have to miss any kind of session which are related to your JAIIB and CAIIB preparation. And do make sure that you like the session and share the session with your friends and colleagues who are also preparing for a certain promotion exam of bank, JAIIB and CAIIB. Okay, so thank you all for joining the session and stay safe.